There is only really one type of investment opportunity that I like more than a dividend-paying stock, and that's a dividend-paying stock that delivers through on reliability month after month and year after year. Because at the end of the day, as a dividend investor, young or old, growth-oriented or not, who wants to have a shadow of a doubt about whether or not they're actually going to receive a dividend from the company that they are investing into? I don't want to worry about any dividend cuts. So today, I wanted to break down 6 dividend stocks that have incredibly strong brand names with very crisp and clean reputations, as well as management teams driving revenue growth, all while ensuring the balance sheets of these companies are incredibly clean, meaning little to no debt. Now, in exchange for my list of dividend stocks to add to your watch list today, I'm just going to ask you that come the end of this video, you do some research and comment down below with your honest thoughts on each of these dividend picks, because at the end of the day, it really goes a long way in helping other investors who are a part of this channel. And I also want to let you know that each of these stocks will be ideal picks through market turbulence, which we have already been experiencing quite a lot of rather recently. And we're very likely to continue to experience a state of flux. So as we move into the future, which is uncertain just amidst all the market volatility, these are your dividend stocks that you can rely on. However, I'm going to leave it at that in terms of the macro talk for today. Jump right into the first dividend stock with you. We have McDonald's, ticker symbol MCD. This is truly a dividend stock, whereas their slogan rings true because, well, I'm loving it. Not only as a fast food juggernaut, but a real estate powerhouse. Now, regardless of your personal take on McDonald's, because if you're like me, I'd actually never really consume the food, I will enjoy the McDividends any day, and as an investor, it's most important to understand that it's an iconic name that gives it a moat. I mean, whether the economy is going up or down, you're always going to see McDonald's with a line outside the door for their burgers and fries. But now in terms of the actual stock, clicking into the stock chart, we're going to see that McDonald's has faltered quite a bit recently, trading now for just $286 per share, which is down from over $314 per share back in October. Clicking out to the 5-year chart, we're going to see that there's plenty of greenery here, as the stock soared by over 38% worth of share price appreciation. Now come down with me to the McDonald's income statement, where we're going to see an increase in both revenue by almost 10% and net income by over 37%. Roll down a bit more with me to the balance sheet, and we're going to find total assets have popped up by over 11%, meaning McDonald's is sitting on north of $56 billion worth of assets, though something I want to have my eyes on here is the liabilities trumping assets. But now, as for the McDividend I was talking about earlier, we're going to discover that McDonald's comes in with a very respectable safety score of a 77, a dividend yield of 2.47%, as well as a 56% payout ratio on top of a 46-year dividend streak. And now we're coming in with a whopping 15% dividend growth rate averaged over the last 20-year period. Moving right along into a personal favorite of mine, I want to talk about Lockheed Martin, ticker symbol LMT, which is a defense contractor, but over the years has just become the dominant name, or rather the go-to defense contractor for the United States government as well as our allied forces. And just when it comes to Lockheed Martin and this type of investment, what's most notable, or at least what you have to understand, is that as long as there are people walking this planet, there are gonna be wars. And because of that unfortunate reality, we have the need to invest in a company like Lockheed Martin for weaponry and arms. Lockheed is that company that I'm personally going towards because it is just continuing to prove itself week after week, month after month, securing plenty of government contracts by the millions. And the wars of today, whether in the Middle East or between Ukraine and Russia, allowed for Lockheed to enjoy quite a bit of a run-up. But now that Trump is taking office, it really does appear that these wars are winding down, which is actually why we're seeing right now Lockheed sliding. But this is now a great opportunity for a buy-in from us, as it's trading for $468 per share. That's down from over $600 per share back in October. And clicking into that 5-year chart, you're going to see that it's pure reliability we're talking about with Lockheed. So I'd say it's worthy for any portfolio if you're looking for stability. Scrolling down, we're going to see a spike here in revenue, and more importantly, a nice rise in net income by over 20%. Now, on the balance sheet, where it matters most, we have $52 billion in assets, just $45 billion in liabilities. not too bad of a difference there. However, jumping right into Simply Safe dividends, we're going to discover a safer pick according to Simply Safe with a safety score of an 84, the dividend yield coming in at 2.82%, as well as that payout ratio coming in at 45%, which is low for most companies, and then we have a 31-year dividend streak. Now, that's all on top of a very solid 16% average dividend growth rate. But if you're someone who isn't necessarily able to come around to investing into a weapons systems type of contractor like this, I want to have you go ahead and get your eyes right now on Caterpillar, that's ticker symbol CAT, which is a company that has established itself globally as the largest construction machinery and engine manufacturer, which is huge because if you're not destroying the human race in war, well, you're busy building it up. What has been really interesting actually to watch this past year is Caterpillar's performance, because given our economic conditions, I wouldn't have seen Caterpillar's growth rising by over 23%, trading now for $361 per share. And I would imagine that as our economy comes around, the economic environment gets better for companies like Caterpillar. Well, Caterpillar is only going to continue to soar and perform very well. So clicking out to that 5-year chart, you're going to see plenty more growth here, 147% worth of appreciation. And working our way down to that income statement, you're going to see a nice 12% bump in revenue, as well as income here by over 54%. That results ultimately in a clean balance sheet, $87 billion in assets to just $67 billion in liabilities. But we're here for the dividend and that reliability in the dividend. So we're going to go ahead and click into Simply Safe Dividends, a 93 safety score, along with a bit lower of a dividend yield coming in at 1.56%, a 25% payout ratio, and a 31-year dividend streak. Now, you're also going to enjoy dividend growth with Caterpillar coming in at roughly 10%. And with that, 3 dividend stocks down, 3 more to go. But before I cover them, investors, help me out in just piecing 2 and 2 together. There's 55% of you out there who keep tuning in video to video, but you're not actually subscribed yet. Now, if that's you, I want to go ahead and ask you to subscribe right now, as it helps me out in growing this channel. And of course, just helps me understand that I'm actually making these videos for the right reasons and it's helping all of you. Now, while on that same note, tap on the thumbs up button to let me know that this very video is actually providing you with value. With that, we'll jump right back into it, diving into Exxon Mobile, that's ticker symbol XOM, which is a oil and gas energy behemoth that fluctuates in accordance with geopolitical tensions as well as our current economic environment, just the state of the economy, which right now, again, is quite unstable as we teeter-totter along. So clicking into Exxon's stock chart, we're actually going to see exactly what I'm talking about here, as the stock slid recently, trading now for $106 per share. And if we click to that 5-year chart, this is what matters most for me, that long-term investor. We get an energy gem here coming in with over 54% worth of share price appreciation. Now scroll down with me where we're going to see a solid income statement, but depicting some declines, which all makes sense, again, given our current state of affairs. Move on to the balance sheet here, which is what matters most as a long-term investor. Assets are popping up now to a total of $376 billion, while liabilities are only coming in around $163 billion. But better yet, it's all about the dividend. As we know, the dividend income that we're going to get from Exxon Mobile comes in first with that safety score in an 80, a higher dividend yield at 3.71%. Top of that, a 44% payout ratio, and one heck of a dividend streak here, 142 years. Now, while we're continuing on that dividend streak, we get some growth, 7% on average there over the last 20 years. Up next, let's talk about a real estate go-to for many of us, Realty Income, ticker symbol O, which is a leader in the space in terms of net lease solutions, with over 15,000 properties spanning across the United States and abroad, over 1,000 clients to lease these properties out to, and typically maintaining an occupancy rating of around 98+%. That just spells reliability. However, during times of higher interest rates, or even right now where interest rates are being dragged out, pushed along, Realty Income has been in the negative spotlight for investors, which therefore makes it the perfect call right now for long-term investors like us. You get a stock share price at $52, which is down from over $64, but we were gearing up for rate cuts, which we never got, so the stock slid. Coming right on down to the income statement, we're going to see plenty of positive signs here, from the 22% increase in revenue to a slight spike there in net income as well. But I also want to go ahead and take you down to Realty Income's balance sheet, where we're going to see that Realty Income has over $57 billion billion in assets to just $24 billion in liabilities, with an increase of total assets there recently by over 16%. And if you're desperate or you just want to have passive income on a month-to-month basis, Realty Income has you covered with the safety score here of an 80, a 6+% dividend yield, which stems from its 75% payout ratio while on a 55-year dividend streak thus far, and continuing to grow nominally here by 5%, which is all worth it if you're looking again for cash now on a monthly paying dividend stock. Now finally, I want to discuss an ultra safe dividend investment with you that has recently taken a nosedive into the red. It's American States Water, ticker symbol AWR, which is an electric and utility company founded all the way back in 1929, but has only become really locked in with the United States government in these 50-year privatization contracts that gifts investors like you and I with plenty of security. As we click into the stock chart, we're going to see that American States Water is actually down currently by about 7%, trading for $72 per share, and not so much better there on the 5-year, ultimately down by about 13%. But again, that creates opportunity for us. And investing into American States Water is all about the win to buy it for the upside, because scrolling down, you could see revenue is coming in over 21% rather recently, net income soaring by over 60%. Now, on top of all of that, the balance sheet is going to read here very clean, $2.2 billion in assets to just $1.4 billion in liabilities. And as for the dividend metrics, well, let's go ahead and click into Simply Safe Dividends. We're going to see a 98 safety score, a solid 2.55% dividend yield, along with a 59% payout ratio and almost 70 years worth of a dividend streak. But then we're going to also capitalize on some dividend growth here as well, with the growth rate coming in at 7% averaged over the years. Now, investors, there you have all 6 dividend stocks I want your eyes on right now. Let me know your thoughts on each of them down there in the comments below. Be sure you tune in right here to ask yourself the one question, or at least learn about the one question that you need to be asking yourself as an investor. Subscribe before you click away, and I will see you all in the next one.